G'day, fools, and welcome to Motley Fool Stocks in Focus, the series that I hope you're used to by now. I hope you're listening to it on the Motley Fool Money podcast feed. I hope you're also watching it on YouTube because, hey, if once is good, twice is better, right? Wherever you are consuming this particular piece of content, thank you for tuning in. Motley Fool Stocks in Focus is our opportunity to go behind the curtain, to really kind of give you a sense of the way we think about some of the companies on the ASX. Now, generally speaking, in this feature, we try and pick big companies, businesses that are owned by a lot of people. Maybe they're in the news, maybe both. Businesses that we think are interesting. Just that kind of, an opportunity for us to share with you our thoughts, but also to get a sense of our investment approach and the way we think about stocks and think about investing. So that's what Stocks in Focus is. It is on both those platforms, as I say, and it is, of course, only general advice. That's different from personal advice. Personal advice is I say, you should do this based on what I know about you. We don't do that. We do general advice. We say, here's what we think about this thing. You have to decide whether and to what degree it's right for you. So please keep that in mind. Also, as always, this has been recorded at the beginning of November 2025. Date stamped, by the way, because it's the beginning of November, also because you might have heard the dog beside me bark. I have an 8-week-old puppy. So there you go. This is Diesel's first multimedia appearance. If it gets too bad, we'll start again. If not, we'll keep going. How's that for recording live? I say we, of course, I am joined by Darius Zarghami. Darius, g'day.
G'day, Scott. How you going?
Good. Did you hear the dog in the background?
I can hear it ever so slightly, but it's very cute. So
here's an 8-week-old German Shepherd puppy called Diesel. Check out my socials. Not an ad for my socials, but if you want to see what he looks like, he's pretty cute. All right, let's try and push through, mate. As I said, just finishing off that last thought, we're recording this in early November 2025. Things change, right? So this is our view at this point in time. Things change because circumstances change, prices change, all sorts of good things happen. Okay, let's get on with it, mate. Let's talk about a company that everybody has. I reckon everyone knows. I reckon almost everybody listening to this or watching this has bought something from JB Hi-Fi at one point, or at least knows someone who has. It is one of the biggest retailers in the country. I won't do much more description. I'll throw over to you. Tell us the story of JB Hi-Fi, please.
Yeah, it definitely hardly needs an introduction, really. And you mentioned everyone's bought something from JB Hi-Fi. I just bought my brand new phone from JB Hi-Fi, which is really nice. Why I wanted to talk about the company. I was really pleased with my shopping experience, and it got me thinking about the company, and I said, that's the company I'll talk about for Stocks in Focus. So, nice. But just because I liked my shopping experience doesn't mean that I necessarily like it as an investment. You'll have to watch to the end to find that out.
Nice taste. Well done.
Yeah. But onto the company, though. It operates 3 core brands. JB Hi-Fi is obviously the biggest, Good Guys, and it's got this more recent acquisition, ENS. But basically these stores, everyone knows it. They sell an expensive range of products. You got consumer electronics, white goods. In the case of ENS, they've got appliances, home entertainment systems, that sort of vibe. They've got about 340 stores in total across Australia and New Zealand. They've got a website for each of their brands. And I guess, like I said, it doesn't need any introduction, but in case you haven't seen one of their big yellow stores, or in case you haven't heard the phrase come in and see the good guys, I guess I'll go through each brand. JB Hi-Fi sells consumer electronics, sells TVs, laptops, phones, like I just bought, Fitbits, microwaves, all that sort of stuff. There's about 220 stores here, so it's the biggest segment for the company. There's a website, there's a commercial segment that sort of sells to SMEs and to schools as well for the, the laptop rollout that we've got going on in Australia. Then there's the Good Guys. They've got about 100 stores. There's some crossover here with JB Hi-Fi. So they got TVs and bigger home appliances like washing machines, fridges, dishwashers, fans, aircon units, that sort of thing. They also offer a website, of course, as well. And then the last segment, the smallest segment, that recent acquisition that I mentioned, they acquired about 75% of ENS in 2024, so just towards late 2024. And basically what ENS is, it's more of a commercial operation. It does sell to consumers, but it's offering, I guess, fridges as well. Like there's some crossover there with Good Guys in that it offers fridges, washing machines and such, but it's mainly focused on home renovation, builders, architects are more its sort of speed. And there's only about 10 stores, given it is that new operation for the company. But that's really the JB Hi-Fi business as a whole in a nutshell.
All right, I'm actually going to bring my dog up
Oh.
because if you want, there you go. There's an excuse to watch on YouTube. This is the first time he's been in my office, and while we're recording, he's just chewed most of the cables that are hanging down. So he's now going to sit there and there's the thing on my lap. So there you go. You're welcome if you're watching this on YouTube. I will try and remain entirely professional rather than starting this recording again. We'll keep going and we'll see how we go. So don't get distracted by the dog. Watch Darius instead, but the dog is here. Mate, let's go to the business itself. You've done a great job of summarizing it, but a business, as you rightly pointed out, is not the same as a good investment. So let's go through the pros and the cons. Let's talk about why our viewers and listeners might consider buying shares in JB Hi-Fi.
Yep, I'm glad you asked for the pros. This is the bit where I get to talk about my new phone purchase a little bit more.
Nice.
But really, in all seriousness, I found it a really good bit of scuttlebutt for me. Scuttlebutt's where you sort of go and do on the ground research. You look at a company's services, you talk to people in the store, not customers generally, but you talk to, the people working there, the suppliers, that sort of thing. Sure. And I like to do this when I visit a company, whether it's listed or not, but especially if I know it's listed. If I go to one of Super Retail Group stores, generally I tell them I'm a shareholder and I'm interested in, finding more about the company, and we have a good chat. I'm not a shareholder of JB Hi-Fi, so I don't usually do that. But still, I like talking to them. Back onto my new phone though, I went to the store, was greeted immediately. That was a tick from me. I was asked what I was looking for, introduced to a really knowledgeable and helpful staff member, and they walked me through all the different phone options. But that's something that I really like about JB Hi-Fi. I think that's something that everyone who shops there likes about it. It's people who don't just talk the talk. It's people who understand and use the products themselves. It made my decision making a lot easier, and I think that's something that JB Hi-Fi has really worked hard. I'm trying to think of the word here, but it's something that they've really worked hard to cultivate. It's something they've worked hard to cultivate, really.
Yeah, nice.
In their brand. But further to that, I checked online for prices of the phone, and JB Hi-Fi was the cheapest option. It was the cheapest in-store option. But something else JB Hi-Fi prides itself on is being the cheapest. And I asked for a discount. I got a discount. And that's something that, again, people who shop at JB Hi-Fi really, really know about. And it's just a really good thing that they offer. It's one of their competitive advantages, I think. And that's really just because of their scale and because of their, I guess, differentiation, that they are able to negotiate cheaper prices with their suppliers, which then also means that they're able to offer discounts to their customers as well, without necessarily sacrificing on margins and things that other businesses might need to do. But that is a good segue into the company's financials. The company is performing quite well. Sales in FY25 rose 10% to 10.6 billion. Underlying net profit after tax and EPS, earnings per share, were up 8.5%. And for what's a relatively mature business, a relatively mature retailer, those are some really decent numbers. But really, with only 340 stores, and that's across JB Hi-Fi, The Good Guys, and DNS, I think there's plenty of room for more growth geographically, which should allow them to continue growing at this rate for quite some time. But across the group, they're expecting about 9 new stores to be opened in FY26 and 1 to close. And I think that can continue for some time. Lastly, though, I just want to quickly touch on that acquisition they made last year of ENS. I see plenty of opportunity for growth here. It's by far the company's smallest segment. Sales for they acquired it in September 2024. So sales is only for the 9 months of FY25. But it came in at about 225 million. We don't have comparatives, but I think that's a really good run rate for a business that sort of shows that it's a very established business if it can produce that kind of sales. But something that did stick out to me from ENS was its earnings before interest and tax margin, which came in at about 1.85%. This is well below JB Hi-Fi and The Good Guys. Those came in at 7.5%, or roughly 7.5%, and roughly 6% respectively. So there's still a really long way to go of margin expansion from ENS to get it to the position that Good Guys and JB Hi-Fi are in. And I think if JB Hi-Fi, or if management, I guess, is able to position ENS in the way that it has JB Hi-Fi and the good guys, that's really very well possible, and that could mean some really solid, good bottom line growth from the company. But that's what I really like about the business, and also my experience buying a new phone.
Well, it's a good combination, right? I mean, at the end of the day, they make money by doing things that people like, and we're not always the target customer or even the average customer of a business. But sometimes when you are literally that person, you can see what's going on, and you can kind of sense check the reality. You mentioned too, it's a big business, still growing really strongly, which is nice. By the way, you did a wonderful job. Keep talking while Diesel was being silly here. So well done on that one. Look, that is the positives, and as always, there are negatives. We don't try and be balanced for its own sake at the Motley Fool, particularly our recommendations. I should say, we're not representing or presenting JB Hi-Fi as a formal recommendation today, but we do the pros and the cons. We say, well, look, here's what we like, and here's some things to be mindful of, or at least consider things that might go wrong. Let's try and do that for JB Hi-Fi. What are some of the cons? What are some of the potential risks? Why are the reasons that people might consider not investing in JB Hi-Fi today?
Yeah, I think the biggest risk to JB Hi-Fi is competition. So when I looked for the new phone, I like JB Hi-Fi. I know I can go in there and get a good offer, but there's so many other places that I can also go to get that. There's no barriers to entry in retail, really, especially when anyone can start up a website now and sell these things if they really want to. There's Amazon, there's Kogan, there's Harvey Norman, there's Apple, there's Dell, there's Samsung. You name it. There's just so many different competitors out there, listed, unlisted, juggernauts. It's a really competitive space. I think JB Hi-Fi does, with those competitive advantages I mentioned earlier, the people and culture offering that they have, the lower prices, they do a really good job of differentiating themselves from Amazon and Dell and Harvey Norman and Kogan. Something else that jumped out at me about my purchase of a new phone, and every other time I've gone to JB Hi-Fi, is they have this product called Extra Care, or Extended Care. I can't remember the name of it exactly, but it's basically an extended warranty that isn't through the manufacturer. It's only through JB Hi-Fi, and it increases your warranty to sometimes up to 5 years for manufacturing faults. My old phone lasted about 4 years. I wish I had that Extra Care product, and I do have it on my new phone, so I'm going to be really happy when my phone. If it breaks, I get a new one. Totally fine. But that's something that really only, I think, JB Hi-Fi or another larger retailer, but as far as I can see, only JB Hi-Fi is really offering. You won't get that sort of service on Amazon. You won't get it if you go to a distributor or a really small operator who just can't offer that sort of insurance service, really. The next thing I mentioned previously, people know when they're going to JB Hi-Fi, they're going to get the service, they're going to get the product range, knowledgeable and helpful staff, cheaper products. That's a reputation they've built, but that's also a reputation that I think can be really meaningfully damaged, whether it's by competitors, operational issues, things like that. JB Hi-Fi also really needs to navigate the ongoing evolution of these products. They need to make sure they're positioning the products, they've got the best products, they're able to maximize sales per square meter, things like that. Something that jumped out at me, I bought my phone at JB Hi-Fi. I wanted a screen protector for it. I wanted a genuine brand screen protector. So Samsung, I bought a Samsung phone. I couldn't find the screen protector, the genuine one, at JB Hi-Fi. For that, I had to go somewhere else. So that is a potential risk if they're not able to get the best products, the best brands. If something like that was to go wrong, could see people go to a competitor instead, like Officeworks, for example, which also offers phones and things like that. The last risk I do want to touch on, largely outside of JB Hi-Fi's control, is a economic downturn. So things like interest rates, cost of living, low consumer confidence, inflation, all these things, they're all out of JB Hi-Fi's control, but they may eventually hurt the business. Fortunately, though, JB Hi-Fi is in a really strong position. It's got a strong brand that I think should endure, but it's nevertheless something that we really need to be mindful of, I think, if we're investing in JB Hi-Fi.
Yeah, nice summary. Thank you, mate. Diesel not happy about the bad things as well. Let's let you foreshadowed beautifully at the very beginning. You're going to give us a thought at the end. And as I always do, I said these aren't formal recommendations, but I do always ask the Motley Fool analysts like Darius whether they think the business is likely to be a market beater over the next 5 or so years. We're long-term investors at the Motley Fool, so 5 years is the period we care about. Tell us, Matt, over the next 5 years, do you reckon JB Hi-Fi beats the market or lags the ASX?
This was a really tough one. Looking at it, I thought in the near term, I don't think it will beat the market necessarily.
Okay.
The long term was a bit harder. I think it's just trading really expensively at the moment. I had a look at its peers. I had a look at it. JB Hi-Fi is trading at about 24 times earnings, which is on the expensive side in my view. And I think retail in general at the moment is looking a little bit expensive. By comparison, Harvey Norman, which is a direct competitor of all three of JB Hi-Fi's core brands, is trading at about 17.5 times earnings. Super Retail Group, which doesn't really compete, but it's also a really strong retailer. So it's got that brand, it's got that ability to endure. Even that is only trading at about 16 times earnings. So I think with that lofty valuation of 24 times earnings, I think it's a little bit of a cause to concern. And I think that may see the company underperform the market in the long term.
There you go. An underperform expectation from Darius. Fools, thanks for watching. Thanks for being part of Motley Fool Stocks in Focus. Thanks for bearing with Diesel. Or if you're watching on YouTube, hopefully you're enjoying it. Darius, you've done a spectacular job despite his moving around and whining and carrying on. We will have more of these. Make sure you do subscribe to the Motley Fool Money podcast feed and the Motley Fool YouTube channel. If you are listening on the podcast right now, it's youtube.com/fool AU. If you're on YouTube, just search Motley Fool Money on the podcast feed. Look for the Motley Fool Australia one. There is a Motley Fool Money US. So make sure you're getting the right one. If there's a dog on there, you'll know it's us. Thank you for watching. Thank you for being part of the Motley Fool community. Until next time, Fool on.